Nice little hoodie, huh? Guess what we got? TP's on deck. Take profit hit on EURNZD. Man, I cannot grow a beard. You can see I can grow a chin, but I can't grow a beard. Should I shave it? Yeah, let's shave it. All right, I'll be right back. So we back, shaved a little bit, just clean it up, but realized something. I'm building my trading desk, and what I got is, so we got the iMac, everything set up on that, and then I got a MacBook, right? So I was like, well, why don't I just plug the MacBook up, put a TV up here. Now I got charts, a free screen, another screen, but won't. The trackpad on the TV is not ideal. So what we're gonna do is we're gonna go to Walmart, pick up a mouse, and that's the game plan. Then come back, do this breakdown. So yeah. I'm gonna kind of try to do a little bit of what's going on, what I'm kind of doing on the day, and then do some chart analysis. That seems to be what everybody likes. That seems to be what everybody's posting. So if you like that idea, drop me a like or a comment down below what you would like to see, and I can make it happen. But really, I just want to take everyone on this trading journey. Everyone who wants to pay attention, everyone who wants to tune in. You know, by no means am I the best trader in the world. I'm not a bad trader either. I'm profitable, but it's not, how could I say it? It's not as glamorous as everybody's making it look. So, I mean, this is a real deal, chilling. It's not nothing super gonna be extravagant, at least not yet. It's not where we're at in this journey. I am profitable, gotten to the point to where I can offer signals. So we'll see what goes from there. If you're wondering where I'm at, that's where I'm at. Been trading for a little while, about 5 years, going on 5 years. Been doing this, turn this room into a little like trading office, call it the classroom or something like that. We savants over here, so we in the classroom learning. But yeah, we're gonna go to Walmart. We're going to get a mouse, come back, do this breakdown with all these screens, because you can't be a professional trader without at least 2 screens, right? I got 3 and an iPad and my phone, so we got 5. Took us about 30 minutes. Well, we found them. We don't need no $50 one. We don't need no $20 one either, for real. We'll go with that one. It's always the hardest part, trying to find your car. Oh, let's see. I got the smaller one so it'll fit on the desk. But you can see what we got in here. We got the little mobile mouse, Logitech boy. A little standard, you know. Let's get into this chart analysis. Hey, Lucci. Let's do a little magic. Get him up one of these. Perfect. All right. These are always the hardest things to open, this little plastic. And that's not even part of the video. I'm just saying. I'm gonna set everything up. Then I'm gonna turn the video on and start recording. All right, so back on the charts. Let's briefly go over this EURNZD trade. As you can see, it has thus hit take profit, a nice 3 risk to reward for about 142 pips. So we went over how we were into it. When we left off, we were somewhere around in here. It was market close right around this area. Let's go into replay mode and we'll go over how we were able to get into this trade. So on the monthly, let's do our multi-time frame analysis along with structure the right way. And let's get into it. On the monthly, what do we have? On the monthly, we had previous support, now turn resistance. The market had just retested. What do we want to see? Move to the downside. Resistance turn support. Okay, these charts clean. On the weekly, what do we have? On the weekly, we had an overextended W formation. What we like to see, the pattern completed at the neckline and continue up. So we had market just broke support, retested as resistance on the monthly. Overextended W formation on the weekly. On the daily, what do we have? On the daily, we had overextended W formation. We had price retesting this recent resistance, now turn resistance again. So on the daily, before we even get to this point, we're still here. So say we're here on the daily, price has not shown us any movement of bearishness. We know that overall, after an overextended W formation, we would like to see price come and retest at least the 382, which is most likely close to the neckline. We either want to see the price come and retest the neckline or at least come down to the 382 before it starts its move to the upside, because the 382 is the first level of resistance on the overall impulse that broke out that the market would find support. It's the first Fibonacci level, blah, blah, blah.
Let me slow down.
We know that if we take our Fibonacci from the low to the high, after an overextended W formation, we would like to see the market at least come down to the 382. Why the 382? Because that's the first Fibonacci level that would provide support for the overall impulse to the upside. Now, what we were looking for was a move to the neckline, which is where the pattern completes itself. So if we have a W formation, overextended W, we want to see see the market come complete at the neckline, and the same thing for a double top. So if we have overextended M formation, we want to come see the market complete at the neckline. So we had that on the daily. Now, if we travel forward, we don't really draw the Fibonacci until we see the first sign of bearishness, which is a candle, a bearish candle, which is the first sign of bearishness is a bearish candle. So we had a bearish candle, which is a railroad, tweezer tops, whatever it is. It opened and closed at one position, and then the next day it opened at that position that the market had closed at previously, and then closed where the market opened up the previous day, which is showing that all sessions, so Asian session, London session, New York session, all had an overall bias of bullishness for a day, and then the next day all sessions, because the end of the candle, the end of the daily candle closed bearish. That means the overall bearishness, the overall sentiment on the market for that day is bearish, because all sessions closed with the candle being bearish. So that is our first indication of bearishness, that we would like to see this market move to the downside. So we just had the rejection of the resistance on the monthly. We saw that we had an overextended W formation on the weekly, and now on the daily, we're starting to see price make its way down to retest at least the neckline, at least at 382, but we want to see price get overall to the neckline. So on the 4 hours, what do? Price came up here, and this was the next day. So this was the bearish day. We want to see market break out of this channel. If it breaks out below this channel, this consolidation, this sideways moving market, that's what you don't want to trade. You want to stay out of movements in the market like this. So we want to wait until the market breaks out of this area before we start to make a bias that the market wants to move down. Because once again, what do we need to see if we want to sell the market? We need to see lower lows and lower highs created. Right now we have a higher high. This high was higher. This high is higher than this high. So right now we're making higher highs and higher lows. Now only until we break below this level here will we start to create lower lows, because we made a high, made a low, 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 made a high, made a low within this structure area. So let's not get too into it. Let's play it forward. Okay, so this candle is the candle that broke and closed below the structure. It broke and closed below the structure we had identified that we wanted to see the market break if we want to see lower lows and lower highs being created. For us, we want to see that because we have an overall bearish bias. So if we drop down on the 1 hour, what happened? And this is exactly when, actually this candle was when I woke up. Now, the ideal spot to get in would have been on this candle. Stop, Lucci. The ideal candle would have been this candle to get in, because this was the hourly candle that broke and closed below the structure. But since I didn't wake up until 1, this is when I saw the market right here. Where's my phone? Just for reference. So as you can see, March 26th, down here at the bottom, we're at March 26th. This was the candle that I woke up on. And after that, if we play it forward, I said, where would be the next best place to get in on this market if previous support has now turned resistance? So I dropped down on the 15-minute. What can we see? Where would be the next best spot to get in on the market? It would be previous support, now turn resistance. Now, market hasn't retested this area yet. Close. This is when a lot of people will get in and then get stopped out, only to see the move go in their favor. We want to wait until we get a confirmed retest of this area. So at 3:15, let's see, at 3:18. So this was the moment we got in on the market. At 3:18, I said, to get in on this market, we're going to get in on this market right then and there. So that was 3:18. We got in on this market. Let's zoom out a little bit, and then let's see what happened overall. If we play it forward on the 15-minute, so this is when market closed, and this is Sunday, Monday when market opened right here. We have stop loss at break even already. So if market comes back and hits our stop loss at break even, it doesn't matter. This is what I was focusing on earlier, or this is what I was touching on earlier when I was speaking about patience and FOMO, fear of missing out. Now, I don't mind to put my stop loss at break even right here, even if it comes back and stops me out for no gain, because I know that there will be another opportunity in the market. You're not going to get rich off one trade. So forget that thinking. Once you get let go of that, and you're going to have to make multiple trades in order to make profit, you're going to have to keep trading. So that includes wins, losses, everything in between. You're going to have to keep trading. You're not going to get rich off one trade. So with that in mind, I know, okay, stop loss to break even. I want to protect my capital at all costs, because this is what I use to play in the game. If this was a game, this was my ticket of entry is capital. I need to protect my capital so I can continue to play. Stop losses at break even. If it gets stopped, it doesn't matter. It doesn't matter. We didn't lose anything. We didn't gain anything. We gained another opportunity, which is the best thing, because there will be another opportunity. There will always be another opportunity. So we play it forward. As we can see, price almost came back up and stopped us out. A lot of people will go ahead and close out their position here, close out here, because they just want to go ahead and close some profit and don't want it to come back and hit their entry or start going negative. But our stop loss is at break even for a reason. And this stops us from that emotion going on. It stops you from making those impulse decisions that aren't part of your trading plan. So it almost came out and stopped us out at break even. If it would have, so what? And it didn't. And when it didn't, that's even more confirmation of us, or me really, to hold the trade, because these are my trades. Hold the trade. So market played around a little bit, around in this area. I said, hey, if you want to take some profit, this is a good area to take some profit, only because if we zoom out, you can look and see that we did actually come and reach in the area. This is after the candle closed. So we were in here. I didn't know if this would hold as the neckline. I wanted to get in this area like our take profit is, but around in this area, I said, if you want to, we're risking for a 1 to 3. Back up in here would have been a 1 to 2. 1 to 2 is not bad. So 1 to 2, 1 to 3, clean setups. You could take some profit there, 1 to 2, bank it out, just because we were hitting in here. Me, I held because stop losses at break even. If it comes back and stops me out, oh well, I'll be in another trade. Watch, I promise. That wasn't the last trade. And then what did market do? Really toyed with us. As you can see, TP was hit, TP was reached. But yeah, man, I'm enjoying it. I just want to share my journey, my experience, my trading, and meet with some like-minded individuals. And that's why I'm here. So if you like it, if you like this, drop me a like, thumbs up. It's really appreciated. It goes a long way. Drop a comment, something you want to learn, something you want to see me talk about, something you want to see, something you're struggling with, anything I can help you with, maybe some video ideas. I have plenty, but if you want something specific, I can make some videos around those topics to cater to you. Subscribe, of course, so you can see when I post the next banger. The description. Click that link. It's free. Follow me on Instagram too, FX Savant. FX Savant everywhere is what it's gonna be. Yeah, that's it, man. Appreciate you for watching. See you in the next one.